Welcome back to QAV America. This is episode 7. We're recording this on the 27th of May. My name is Cameron Riley. With me is Tony Kynaston. How are you, TK?
Very well, thank you, Cam. As the rain comes in.
Raining in
Sheets,
Victoria. Who's ever
it's moved
heard
on
of that?
now. It's very Scottish down here at the moment.
Speaking of which, I have a Scottish aunt who's coming to us, or is in Australia actually at the moment, but she's coming to Brisbane at the end of this week, who I've never met before. One of my dad's sisters is coming to spend a week with us in Brizzy. That'll be nice.
Oh, nice. Yeah. She can give you all the lowdown on your dad.
Yeah, I'm looking forward to that.
Yeah.
Although I think she was quite young when he left Scotland, so I don't think she actually knew him very well at all. So I think because they had like 12 kids in the family, and I think she's one of the younger ones, and he was the third eldest. So, and he left when he was like 18 or 19 and came to Australia. So then, yeah, that was the last time they saw him until he went back for a visit, not a year or two before he died.
That's a sliding doors moment. You could have wound up anywhere in the world, couldn't you? But your father chose Australia.
Well, no, my mother was here, so if he'd gone somewhere else, I wouldn't be me. It'd be someone else.
Yeah, true.
Anywho, let's talk about our US portfolio, Tony. It was down a little bit in the last 7 days, down 1.3%. And the benchmark was up quite a bit, 9.85%, according to Stockopedia. But then when I looked at the charts, that doesn't make much sense because the S&P's
sounds like a lot.
down for the week. Let me just open up Stockopedia again and see if I wrote that down incorrectly. In the last week, so that's May 19th. Yeah, okay. Now it's giving me a completely down. It says it was down 1.93%. Okay.
There you go.
There you go.
We need some television hold music while you check things.
Yeah.
Like a little bit of Herb Albert and Tijuana Brass or something in the background.
I just edited it out of the show. It's all right. No one knows.
Oh,
What?
I'm referring to something which hasn't happened.
Yeah. Actually, okay, so looking at this now, it says we're down 3.7% for the last 7 days, and the S&P 500 was down 2.6% for the last 7 days. So we were down a little bit more, but not by that much. So that sounds a lot more reasonable anyway than the numbers I got earlier.
Sounds with my mental picture of what's happened in the US in the last week.
Yeah.
In their stock market.
But this Australian financial year, which is from the 1st of July through to today, our portfolio is up about 25% versus the S&P up about a little bit less than 6%. So we're still doing quite a bit better than the benchmark, even though we've come back a long way since Trump started doing his tariff business. We're still comparatively doing quite well and can't complain.
Yeah. And we don't complain because nobody listens.
Speaking of Trump's tariffs, we talked about this on our Australian show, but he started talking more about throwing tariffs around willy-nilly this week, 50% to the EU, 25% on Apple's iPhones if they're not made in America. And we talked about on the Australian show how it's mostly, I think, just misdirection. It's just maybe a negotiating tactic, but I don't think so, really. I think it's just misdirection while they're pushing through the one big, beautiful bridge bill and trying to rush that through and get a lot of Project 2025 dream projects pushed through while people aren't paying attention. That's my take on it, but I know you think it might be a genuine negotiating tactic.
Oh, I think it's probably both, Cam. It's getting people to call Trump and start dealing. The only leverage he has is to impose a big tariff and then pull it back, I guess, if they start to deal. And it's like training a dog, isn't it? It's like the beating will stop once you come to heel. But yeah, it is also because I don't think there's been any renegotiations of tariffs or much renegotiations of tariffs yet. It may happen. But as you say, there's been a big bill passed in the
House.
Thank you. I was trying to think of the right term in the American Congress, and taken to the Senate. So we'll see what happens with the big, beautiful bridge bill. It's a lovely bridge.
It's a lovely bridge. It's a beautiful bridge, and it's going to be there. Don't give me those negative waves. But I just want to point out for new listeners, American listeners, our approach to all of this sort of macroeconomic turbulence that's going on, as we say each week in our show, is basically to ignore it. We don't pay much attention to the noise, which is a Warren Buffett and Charlie Munger rule. Ignore the noise. We just focus on the businesses, looking for businesses that we want to invest in. We spend our time looking for businesses that are generating a lot of cash, have a good history of generating cash, and seeing if we can buy them at what we think is a discount to their intrinsic valuation. And speaking of businesses, I'm going to talk about one today. I'm going to do a pulled pork on a company called IHS. And one of the things that I love about dipping our toes in the American market, as I've said over recent episodes, is there's lots of businesses that we don't get to see in Australia. Lots of different businesses with different business models in different markets. And I find it really interesting to learn about these businesses and what they're doing and how well they're doing. IHS is one of those. Ticker is IHS. It's IHS Holding is the name of the company. They're on the New York Stock Exchange. Well, this is in your typical sort of Wall Street darling. It's a telecom tower powerhouse that focuses on emerging markets. And when you drill into it, there's a lot of high stakes, big risks, big rewards as well, but there's a lot of stuff going on here. So what does IHS Holding do? They're literally the nuts and bolts of the telecommunications sector in Nigeria, primarily. The company's headquarters are in London, but they are the world's third largest independent owner and operator of telecom towers, believe it or not. They have 39,000 sites, and their focus is predominantly on emerging markets. So Nigeria is about 2/3 of their revenue, but there's also Sub-Saharan Africa, Latin America, and the Middle East. So, of course, every time you make a phone call, every time you use a mobile, that signal travels via a tower. IHS own the towers and lease them out to telecommunications companies. So they focus on the critical infrastructure. Telecoms companies, apparently, I didn't know this, don't run their own mobile tower infrastructure often. It's companies like IHS that own them and operate them, and then they lease them out with long-term leases, obviously, to mobile network operators, long-term contracts. And in IHS's case, about 95% of their revenue are long-term contracts. And Nigeria, as I said, is a massive part of their business, about 60% of their revenue. And I don't know if you know this, but Nigeria has had a little bit of political instability and economic instability in recent years. So that's all part of some IHS's challenges, which I'll get into. But before I do that, a bit of background on the company. It was founded in 2001 in Lagos by a guy called Sam Darwish, who was a telecom engineer born in Beirut during the Lebanese Civil War, ended up starting his career with MCI in Beirut. Then he ended up as the deputy managing director of a company called Motophone, which was Nigeria's first GSM operator in 1998. Then when the Nigerian government decided to privatize their telecoms in 2001, he set up IHS, and he has been running it for the last 24 years. He's still the CEO and chairman of the company. So we do like founder-run businesses, and this is one of those, although as we'll see later, he doesn't actually own a huge amount of stock in it. But it is a founder-led business, floated on the New York Stock Exchange in 2021, and it was the largest IPO of a firm of African heritage on the New York Stock Exchange. They've come a long way since then. As I said, they've got operations in Peru, in Kuwait. Well, they did have, but they've been pruning those back in the last couple of years because of problems with the Nigerian economy. Again, I knew nothing about this, hadn't been paying attention. But there was a big shock to the Naira, Naira, the Nigerian dollar, the Nigerian currency in 2023. Did you hear about this, Tony?
I did not, Cam, no.
Well, 1 Naira is divided into 100 kobo, Tony. I want you to pay attention because I'll be testing you on this later. In February 2023, there was a major devaluation of the Naira. President Bola Tinubu basically floated the dollar, floated the Naira. The central bank had been propping it up forever. And basically, officially, $1 was worth 460 Naira, but it was limited as to who could access those buying official dollar sources. But you could buy them on the black market for 700 or 800 Naira. So there was a lot of black market currency trading going on. It was a bit of a joke. And when they basically floated it, everyone rushed in, grabbed it, and the price shot up. The official price of the Naira shot up of the dollar shot up from 460 Naira to over 700 in a single day and kept sliding. And this had a massive impact on IHS, but also on the Nigerian economy. Nigeria earns dollars mostly by selling oil, hadn't been pumping much, so the freezer was already half empty because they've had a little bit of political trouble over there. And everyone wanted dollars to buy stuff from abroad. So the cost of everything shot up. Everything that they import, flour, fuel, school books, prices in shops jumped up. Inflation hit 30% by January 2024, which was the worst in nearly 30 years. And companies that borrowed US dollars obviously had a big problem, and IHS was one of those. They ended up with huge foreign exchange losses as a result of this. They had been borrowing huge amounts of money out of the US to fund their expansion of mobile phone towers across all the different geographies they were operating in. And when this all happened in 2023, it created huge problems for IHS, and they took a bunch of losses. But before I get into that, just letting you know that the central bank in Nigeria yanked interest rates up to 27% to try and make the Naira more attractive. So for those of us in Australia and the United States that thought we've had high interest rates for the last couple of years since COVID, take a moment to think about our friends in Nigeria. At the moment, May 2025, $1 hovers around 650 to 750 Naira. So roughly 4 times the old pretend rate of what it was back when they were keeping it unsustainably low. But the free fall seems to have stopped, mostly because money is super expensive to borrow and the government has promised not to fiddle with the rate again. But when it created 70% in 2023, IHS ended up reporting a US $1 billion foreign exchange loss, which was a big issue for them. And they earn about 60% of their revenue in Nigeria, as I said, mostly in Naira. But it reports everything in US dollars. So when the Naira crashed, every 100 million Naira in Nigerian revenue became worth way less when translated to USD. even if their Nigerian towers were still earning the same rents in local currency, when you report the top line in USD, it didn't look anywhere near as impressive. And as I said, they borrowed billions in US dollars. So now all of a sudden their payments in US dollars are going to be way more expensive, and it's going to be a big hit to the bottom line. So they took a lot of hits a couple of years ago, and they've done a lot of restructuring since then. But the flip side to that is they have a lot of long-term contracts. So the business is still trading. It's still doing well on one metric. If you just look at its pure cash flow in Nigerian dollars, it's doing okay, but it took this big hit in foreign exchange, the cost of, foreign exchange translations. By the way, it has a market cap of about $1.9 billion and has an average daily trading volume of around 600,000 shares. So it's pretty liquid. So despite some of the challenges, they've got some compelling strengths. According to Stockopedia, IHS has a stock rank of 99, which is very, very high. Their quality rank is also a solid 72 on Stockopedia, which is, again, pretty high. Their F score is 7, which is pretty solid. Looks at their financial stability and operational efficiency. Their price to operating cash flow is about 2.61, which is quite low. We often say that this is an indicator that if you were getting paid out of their cash flow, it would take about 2.5 years for the company's operations to generate enough cash to cover the share price. So that's pretty low risk. The share price, however, is below its book value, but that's because the book value is currently negative. In 2024, it was negative 1.36. It was positive up until the foreign exchange crisis in 2023, but in the last year or two, it has been negative. It does have a positive recent upturn, positive market sentiment. It's got a recent upturn. It's recently gone above its buy list. It's recently gone above its buy line, and it's above its second buy line after coming back a lot in the last couple of years. But there's a lot of industry tailwinds over there. Data traffic in Africa is growing at a compound annual growth of about 30%, as is Nigeria. So that, if you think about these developing countries, a lot of people trying to get mobile phones. There's a big need for data. A lot of internet being delivered over cellular networks there now. A lot of people running their own businesses over cellular phones and mobile internet. So it's a booming market that these guys are a significant player in. They're the number one player in Nigeria. They have about 45% market share. And as I said, they've been strategically selling off assets in other geographies in order to fix up their balance sheet. They have a $50 million share buyback program in place. About $12 million of that has been executed. And the CEO, Sam Darwish, himself bought $3 million worth of shares on the open market in August 2024. Always a good sign when you see the CEO picking up stock like that. But I want to talk about the weaknesses and risks, which go beyond the foreign exchange thing that I mentioned. Has a negative PE ratio. Their earnings per share in 2024 were negative 4.90. The Altman Z score is a negative 2, the measure of bankruptcy. Obviously, we don't really pay a lot of attention to that, but, we do want to note that when a company is in financial distress, that it's a risk. But as you've said on recent shows, we have triggers in place if something goes wrong with a company to get out of it. They've racked up a couple of years of net losses in the last couple of years, mostly due to foreign exchange translation losses, a lot of depreciation and amortization, and then the interest expense from all of that debt. But their cash flow is strong, and it had been growing quite well up until 2023. 2018, they did 462 million. By 2022, it was up to 907 million. So it doubled in that 4-year period. But then it came back when the crisis happened in 2023. 2024, it was down to 729 million. But really, really good, very strong business before the financial crisis kicked in with the exchange rate. The company doesn't pay a dividend, so it has no yield. The share price is, as I said before, below book. It's also above both of our intrinsic value calculations, so I couldn't score it on that. But the external landscape is where things get particularly dicey. The Naira, I mentioned, has been a big issue for it, and diesel, that's impacted a lot of underlying issues there as well. Like diesel prices are up, their power operating expenses are up, a lot of their underlying costs are up, but some of these are being covered by pass-through clauses to the people they lease these things out to. So it doesn't all directly hit their bottom line, but there's trickle-through effects, I guess, with the carriers and their ability to then cover all of these. You can have a 10-year contract in place, but if the carrier starts to have financial issues and they can't pay their bills, then that can come back and bite you on the ass. But the other one is regional power instability. We've seen a bit of this in our Australian show with some mining companies. I can't remember, was it Ramelius Resources we had 6 months ago where the CEO was...
I don't think it was Ramelius. Might have been. West African Resources.
That was one.
In the area, yeah. So there's sovereign risk.
Might have been Region Resources, one of those. But we had I think it was a gold mining company that was operating in Africa, and their CEO got detained by the government for discussions about how much tax they were paying. Yeah. And it sort of doubled. And then he was released and decided to retire back to London.
Yeah.
We couldn't really blame him. But, there's a lot of regional power instability in that area. And it's called the Sahel region. It includes the south of the Sahara, across the west and central Africa. It's Mali, Burkina Faso, Niger, Chad, Sudan, parts of Nigeria, Cameroon, Mauritania, and Senegal. It's a very poor area, very politically unstable, riddled with ethnic and religious tensions. And there have been 6 coups in the last 4 years in that region, plus a bunch of failed attempts and tense transitions everywhere. You have groups like Boko Haram, ISIS, Al-Qaeda running around in that area. And of course, this comes with issues for just the general health of the economy, comes with issues about how much taxes are you paying, Mr. CEO? Come in and we'd like to throw a banquet in your honor. Why don't you come to our offices and see how it goes?
The ISIS banquet.
Yeah. There are other issues as well, though, like obviously security risks to infrastructure. Towers can get attacked. You can have a jihadist group that decides to cause trouble. They don't want people talking on the phone, so they can blow up your towers. Workers can't get access to sites because there's violence in the area. Maintenance can be disrupted. Energy supply gets cut off. IHS, as I said, have 39,000 towers across Africa, and a lot of those are near these hotspots in the Sahel region. And then you have regime change that comes with contract risk. New military regimes can want to renegotiate, let's put it nicely, or revoke terms. Yeah, you have to assume that even if there's regime change, the new regime wants the economy to be bustling. They want people to have access to mobile telephones, and they want them to have access to the internet. Usually, they may have fundamentalist reasons why they don't want people to have access to it. But generally, I imagine if you become the government of a new country, you want money to be flowing in. You need the economy to be churning to a certain extent. But state-owned telcos too, a lot of them are state-owned telcos, can suddenly stop paying you if there's a junta that decides that they just don't want to pay the bills. So there's a lot of those issues in this region. Capital flight out of these countries when people get nervous about juntas or regime risks. So there are a lot of risks associated with the business, basically. And then internally, they also have some issues. Their largest tenant, a company called MTN, who also holds 26% of the stock of the company, but is limited to 20% of the voting rights. There's a dual class share structure in place. But there's been a lot of agitation between MTN and the company, lawsuit threats, a lot of proxy fights, MTN walking away from lease renewals or threatening to. There's been a lot of board churn as a result of that. So the company's got a lot of issues. I just want to flag that. But drilling down into their financials a little bit, share price, when I looked at it, was at $5.38. The revenue over the last 5 years has managed to grow from 1.2 billion to 2.1 billion. In 2023, however, as I said, it dropped a little bit in the last couple of years. But despite this, if you look at the compound annual growth from 2020 to 2024, it's still 5%, even with the issues coming out of 2023. But it's losing money, as I said before. Some of that's got to do with the foreign exchange issues. And it did swing back into a profit in Q4 2024, but that was largely to do with a brief rally in the naira, I think, the underlying currency. Free cash flow is still negative, but the company does have a lot of cash. It's got $500 million in unrestricted cash and a $400 million revolving credit facility, which is currently not drawn upon. So it's got access to funds if it needs it. But as I said, very low price to operating cash flow, which we score it well for. The consensus from the analysts is actually fairly positive, despite all of those risks that I've mentioned. Out of 7 analysts covering the stock, 6 are giving it a buy and 1 is giving it a hold. So even though it's had a rough couple of years and there's a lot of regional issues, it seems to be fairly positive prospects. And as I said before, Stockopedia's own rankings for it are pretty high. So it has significant opportunity in a growth industry, telecom infrastructure in these emerging markets. The CEO owns about 3.8% of the stock. The COO owns another percent, but that's not 10% that we like to see before we score it on an owner-founder, even though I tend not to score US companies because it's hard to get those numbers out of Stockopedia, but I did drill down into it. We wouldn't score it anyway. A lot of volatility with the foreign exchange, a lot of volatility with the market, but fundamentally, I think it's a really interesting business that has been doing really, really well up until some of these recent issues. It's high risk, but also potentially pretty high reward. I think the management has been doing a good job at not only growing the business before the foreign exchange crisis, but at doing this strategic review, offloading non-core assets to try and cover some of their foreign exchange issues, trying to fix their balance sheet problems. And as I said before, if it goes hairy, we have our sell triggers in place to get us out. I see lots of upside for it, but this is not financial advice. Do your own due diligence. We don't own it. It's not in our portfolio, but it's on the buy list that I did a week or two ago. And I thought it was an interesting company to take a look at. So that is IHS, Tony. What do you think?
Very interesting, Cam. Thank you. You raised a lot of issues that if anyone wants to buy the stock, they can research. But it reminded me of a couple of years ago, Telstra, the biggest telco in Australia, which does own its towers as well, its poles and wires as they call it, was restructured so that they could spin off the tower part of the business, the infrastructure part of the business. And it was hungrily awaited by super funds and pension funds because that kind of infrastructure business is attractive to them because it's what's sometimes called a bond proxy. So it's basically, you borrow money, you build a tower, you have a contract, there's a margin, and it just keeps rinsing and repeating, really, and paying you a sort of steady income stream for that investment, which is what a lot of super funds like, or pension funds like, because it's generally assured income. That spin-off didn't happen, by the way, but it's still in Telstra. But that's been my experience with this kind of business. So what we're seeing in IHS is that kind of bond proxy, but it's also got growth because it's based in the third world, and the BRICS, if you want to call them that, or the third world, are rapidly evolving and becoming, moving up the economic chain from third world to second world, and then developing middle classes, et cetera, et cetera. And something I've known or I've heard about in these cases is that I think it was particularly the case in India, that they basically skipped a generation in terms of IT development. So that, I'm talking to you over a laptop, but in a lot of these countries, they don't have laptops. They just go straight to their phone. And they use spreadsheets and they use whatever over their phones, apps, etc., to do banking and analysis or whatever. Well, you and I would naturally do it on a laptop. So to say that's happening is backing up what you're saying about the telcos growing substantially faster in the third world than they are in the first world. That was one of my questions. Why is this company focused on the third world? And it's because of the growth side of things, I think. So you're getting a steady income stream and it's growing, which is a dimension that you don't get in first world companies like Telstra. But it comes at a price, which we've talked about a lot on the Australian QAV show. The risk is sovereign risk. So something could go wrong. The government could change. The currency could crash. The inflation could astronomically go up or whatever. The question always is then, are you being adequately compensated? And it's when we've talked before about Australian mining companies, like a couple we mentioned before, they generally trade on a PE ratio or a price to operating cash flow ratio, which is much lower, oftentimes half what their Australian counterpart trades at, because you're taking on the risk of something going not wrong, but the curveball coming out because of where they operate. And so the question is always, are you being compensated for the risk? And that's often why companies with sovereign risk come onto the QAV checklist, because they're trading on a very low price to operating cash flow to compensate you for the risk of investing in them. So you're getting a company which has got 30% growth and the sort of stable business model of I borrow money, I build a tower, I get a contract, I make a margin, and I do that again 39,000 times. And I can keep doing it for another 39,000 times, you would have thought, with the same kind of model. And it's growing at 30%, and the margins are good. And can I buy it cheap enough that it compensates me for the risk of operating in these kinds of geopolitical areas? And I'd have to do a deep dive to know whether that's a adequate buffer. But the fact that it's been going for 24 years, these kinds of issues aren't new in Nigeria or in sub-Saharan Africa or in lot of third world countries. So the company is quite used to handling this risk. So I think that's a tick. The fact that it's been around for a long time, the fact that they've been able to make it work through 8 juntas a year or whatever the regime changes in that area of the world, and all the risks that go with that, suggests to me that they have found a way of mitigating those kinds of disruptions. That what they're selling is quite valued. Even though the regimes change, they still keep the telephone towers operating for whatever reason, and it's a reasonably robust business model. So, I kind of like it, Cam. I haven't done any sort of due diligence on it, but it's a bond proxy with growth. It's trading on a low price operating cash flow to mitigate the risk, and it's getting some attention again. Its shares are getting momentum, which is something I like to see as well before we buy. It's got you said before it doesn't have an owner-founder, but did you know what class of shares you were measuring the percentage test? Because it had less than 10% of the shares, but maybe they have extra voting rights, and so it might be the equivalent of having control of more than 10% of the company, in which case it would score for us.
Yeah, no, I didn't drill down that deep. And interestingly, in Stockopedia, when I go into major shareholders, it has nothing. I
I saw that.
had to go looking for another source to drill down on that, but I didn't go as deep as finding out what, kind of voting power these two guys have. I mean, he is an owner founder. He's been running it for 24 years. So, and he's got a lot of money wrapped up in the company through those shares. So, yeah.
He's got a lot of control of some sort.
Yeah.
Yeah. So it might score for us on the owner-founder if we have a look at what the class of shares are on their voting rights. But all in all, it's a very interesting company, and I think it's worth looking at further.
We were talking about this a week or two ago. I was talking about some of these companies that when I drill into the risks that the businesses face, I'm like, oh my God, there's like a lot of stuff going on. But you kind of reminded me that we have get out mechanisms in place if things go horribly wrong. So if it seems to be a relatively well-run business with good track record, management know what they're doing, they've been generating cash, I guess I'm more inclined now to put my faith that they'll continue to do the right thing, and if they don't, we'll get out.
And let's put it in perspective. We're talking about sovereign risk in sub-Saharan Africa and Nigeria. There's been a lot of sovereign risk going on in the US in the last few months as well.
Good point.
And fluctuations due to the government. So, let's not be the pot calling the kettle black here, to be honest.
Yeah, good point. All right. Well, as I said, do your own due diligence, but if you're looking for a value investment, have a look at IHS. It's an interesting business.
Thanks, Cam.
Well, that's QAV America for this week. Tony, have a great week. We'll be back next week.
Thank you. Look forward to it. Happy NYSE.